Welcome back to Alpha Recap. I'm glad you could join us after the close. We're recapping the biggest moves and the stories behind them. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to dig into from today. Regulatory wins, energy permitting, and some heavy volume that really shaped intraday action.
Markets were closed for the sessions earlier this week? No, today was a normal trading day, and the action wrapped up with some clear themes. Let's start with the headline that had everyone talking. MasterCard's payments arm cleared New York's BIT license. Ben, walk us through why that mattered today.
Sure. Clearing the BIT license basically opens New York as a regulated market for MasterCard-linked crypto products. In plain English, MasterCard now has a green light to offer card-linked and custodial crypto services to New Yorkers under a recognized regulatory framework.
So it's less about an immediate revenue bonanza and more about unlocking a big, high-value customer base under a cleared rulebook?
Exactly. Analysts noted this reduces a major regulatory barrier to entry. It's a commercial gateway, the kind of thing that changes timelines for product rollouts and customer onboarding. We should watch how quickly they disclose product launches and any customer metrics. That will tell the market whether this was a near-term sentiment boost or the start of something bigger.
Yeah, exactly.
And just to add, regulatory wins like this are increasingly serving as catalysts. They concentrate attention, and that drives event-driven flows.
Speaking of event-driven, big biotech news today. Nuvalent got FDA priority review for Niloudalkib with a PDUFA date set for November 27, 2026. That puts a hard clock on the story. Explain priority review for listeners who don't live in the world of drug approvals.
Priority review means the FDA committed to a shorter review window than normal. It's designed for therapies that could offer major improvements. Practically, it puts the company on a clear runway where headlines, clinical readouts, and volatility cluster around that PDUFA date.
So trading becomes concentrated around that calendar date.
Right. And Nuvalent also added a chief international officer, which signals they're planning for commercialization, not just science. That hire changes the narrative a bit from pure R&D to launch readiness.
Interesting. Okay, shifting gears. Energy and policy had a big day. There was a permitting surge in California. 154 of 190 permits approved for enhanced oil recovery. That's a big operational signal. But then, a consumer watchdog urged the governor to pause a CARB vote, warning of about a $2 billion windfall to refiners. That's a two-sided story.
Huge two-sided story. On one hand, the permitting activity suggests increased near-term work for producers and service companies. More throughput, more activity. On the other hand, the watchdog's complaint and the potential for the California Air Resources Board vote to be pulled introduces political and legal risk. That can quickly re-rate refining names if the policy outcome swings against them.
So, modelers and analysts have to hold two hypotheses in their heads. Operational upside from the permits and regulatory downside from the CARB backlash.
Exactly. It raises uncertainty on regional supply and refining margins. For traders, that equals event-driven volatility. For longer-term investors, it raises modeling uncertainty.
Right. Not a great day to be long in the dark on regulatory outcomes.
Nope. And to be clear, regulation is acting as both an enabler and a re-rating risk across sectors today.
Let's hit the market microstructure notes. Heavy volume names. The chipmaker finished the day essentially flat, but traded heavy, about 182 million shares. A major Bitcoin futures ETF traded about 160 million shares, and a tiny microcap saw extreme volume of about 203 million shares with a price drop. What does that tell you about flow?
It tells me liquidity and flow were driving intraday action. Heavy volume on small price moves, or big volume and a drop in a microcap, is signature behavior of rotation and liquidity-driven trading. Institutions, market makers, and event-driven traders were actively repositioning.
Which means single-day moves may be noisy for someone trying to read fundamentals off price alone.
Exactly. For active strategies, that creates opportunities and risks. For longer-term strategies, it raises the noise-to-signal ratio.
Short reactions. Quick. Heavy volume, more volatility?
Yeah, absolutely. Right.
Let's talk about the payments and fintech angle beyond MasterCard. There was a smaller deal. Zactus acquired Mortgage Credit Link and rebranded to ZetaLink, though no financial terms were disclosed. That's consolidation and brand play. What should listeners watch for?
When deals don't disclose terms, the next moves to watch are integration milestones, revenue cross-sell metrics, and any disclosures that tie the acquisition to clearly measurable financial impact. In fintech, regulatory clearance plus M&A is a common playbook to scale product stacks and expand cross-sell. The key question is whether the combined brand translates to higher revenue per customer or better margins.
Got it. Okay. Governance and funds. Aberdeen's Global Infrastructure Income Fund got shareholder approval to remove the term limit, and that vote was decisive at about 64% for. That shifts the fund from a timed vehicle to perpetual. What are the market implications?
Removing term limits reduces liquidation uncertainty. Closed-end funds often trade at discounts or premiums to net asset value, depending on expected life and distribution stability. Turning perpetual can narrow those discounts over time if investors see predictable distributions and steady governance. But remember, proxy outcomes and governance moves remain catalysts and can swing sentiment quickly.
Another governance note. A National Municipal Income Fund adjourned its special meeting to solicit more proxies. That keeps uncertainty alive, right?
Yes, adjournments mean the story isn't over. Investors will be watching proxy tallies as the next actionable data point.
Corporate product wins and strategy. Positive Energy was chosen by the City of Philadelphia to power EV charging infrastructure, and a logistics player launched a premium concierge relocation product. These feel more strategic than headline grabbing. What's the through line?
Municipal endorsements like the Philadelphia win act as a beachhead. They make it easier to win follow-on municipal or regional contracts. And bundling premium services, like the concierge relocation product, signals a monetization push. Companies are trying to move up the stack to higher margin, service-led revenue streams.
Makes sense. Quick biotech note. The American Diabetes Association's scientific sessions are in June and could move diabetes and obesity-related device and drug names. That's another calendar-driven volatility point.
Yep. Industry conferences and scientific sessions often produce clinical readouts or management commentary that create short-term re-ratings, especially for medtech and biotech names tied to diabetes and obesity therapies.
Before we wrap, let's run through what to watch tomorrow, or more accurately, what to watch when markets reopen, since we're recording after close. First and most immediate, the CARB vote and California political developments. That's the top near-term policy event.
Absolutely. With the watchdog urging the governor to pull the vote, any scheduling update or official statement could change refining and energy stock trajectories quickly.
Second, the Municipal Income Fund. Watch for a new meeting notice or updated proxy tallies. Third, Apple had a Form 144 alert. The full SEC filing could clarify potential supply implications. Fourth, look for ZetaLink integration updates since the deal lacked financial terms.
And don't forget continued flow in the heavy volume names. If those volume patterns persist, they can generate follow-through volatility even without new fundamental news.
Final quick takeaways before we close?
1. Regulation is a primary mover. It can unlock markets or create headline risk. 2. Event calendars, PDUFAs, conferences, and proxy votes are concentrating volatility into discrete windows. 3. Heavy liquidity flows are amplifying short-term moves, so be mindful of noise versus durable signals.
Great summary. Quick reactions. 2 short ones. Market takeaway number 1.
Regulation equals catalyst.
Number 2.
Watch the calendar. It matters.
That's a wrap. Important reminder, this episode was informational only. Analysts note outcomes and data may influence markets, but we're not giving personalized investment advice. Do your own due diligence or consult a licensed professional for guidance.
If you want to dig into any of these stories, send us a question.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time after the close.
Thanks. Talk soon.